Hey everyone, welcome back. Today we're diving deep, no pun intended, into Superior Plus Corp. We've got their Q1 and Q2 2024 earnings releases in front of us, and well, headlines only tell you so much, right?
Right, exactly.
We're here to dig a little deeper and try to figure out what's really going on with this company.
Yeah, absolutely. And I think, with Superior Plus, there's a lot to unpack. I mean, they're a major player in North America for distributing propane, CNG, RNG, even hydrogen. And they're really in this kind of fascinating transition period, which is what makes these earnings releases so interesting.
Okay, so for anyone who doesn't follow Superior Plus on a daily basis, what's the quick rundown on this transition? What should we be keeping in mind as we kind of go through these numbers with you?
Well, first off, you've got to remember they actually switched to US dollar reporting starting this year, January 1st, 2024. So that makes comparing year-on-year numbers a little tricky.
Okay.
It's not, a perfect apples to apples comparison anymore. You've got to adjust for the currency exchange to draw any real conclusions.
Right, it's not a level playing field. Okay, so with that in mind, let's jump into Q1 2024. Their adjusted EBITDA went up, which sounds great at first glance, but then their net earnings were down. So help me understand this. How can profits be up but earnings be down?
Yeah, that's a great question. And it really highlights why we need to look beyond just those top level numbers. So their adjusted EBITDA, which you can kind of think of as a measure of their operating profitability, did increase.
Okay.
It went up to $235.6 million compared to Q1 2023. But a big chunk of that increase is actually coming from their acquisition of Soteris.
Right.
Remember, they bought them back in May of 23.
Mm-hmm.
So we're now seeing a full quarter of Soteris's numbers baked in.
Okay.
So it's not a completely organic increase.
It's not that Superior Plus itself suddenly became way more profitable in Q1.
Yeah.
It's partly due to this other company now being in the mix.
Exactly. Exactly. Now, the decrease in net earnings is a little more intriguing. I mean, it's down to 85.2 million from 109.3 million. And that suggests that there might be some other factors at play, maybe things like higher interest expenses, because of debt, or maybe increased operating costs, something like that.
Okay, so the takeaway there is don't get too excited about that EBITDA increase alone.
Exactly.
There's more to the story, right?
Right.
And speaking of more to this story, they also saw a 9% drop in total sales volume in Q1. So what's going on there? Is that just the warmer winter we had, or what's going on?
Partly, yeah. I mean, warmer weather always puts a bit of a damper on propane sales, but they also sold off some of their heating oil businesses in 2023, so that impacts the volume comparison too. It's part of this larger strategic shift they seem to be undergoing.
So streamlining a little bit, focusing more on maybe some of their core businesses. But then if we look at their U.S. propane segment, that kind of tells a different story, right?
It does, yeah.
They managed to increase their average sales margins there by 9%, up to $1.65 a gallon, which is pretty significant. How'd they swing that?
Well, it seems like they're being very strategic about their U.S. propane business. They say that the margin increase is due to two things. First, they've got a higher concentration of propane-only customers now, likely because of those divestitures we talked about. And second, they've implemented increased fees, which probably helps them to counter inflation.
So they're becoming more specialized in their propane customer base and then also making sure that their pricing is kind of keeping pace with everything else going on in the economy. That sounds like a pretty solid strategy, but does it hold up when we look at Q2?
Well, Q2 is where it gets really interesting. That's where we start to see this balancing act they're trying to pull off between their traditional business and these new growth areas.
Yeah.
But yeah, let's dive into those details.
So we left off talking about Superior Plus's balancing act, trying to grow at the same time as managing the strategic shift they've got going on. How does that actually play out in Q2?
Well, they reported a net loss for Q2, $45.3 million.
Yeah, it's not great.
Which, sounds kind of alarming, at least at first glance.
Yeah.
It's even steeper than the loss they reported in Q2 2023, which was $29.2 million.
Okay, yeah, alarming is a good word for that.
Yeah.
But they're still projecting overall profit growth for the year, right? I mean, how does that work?
Well, that's where it's really important to understand the specifics of their business, Superior Plus themselves actually point this out. They talk about how seasonal their business is, especially when it comes to propane. In fact, in their Q1 report, they specifically say that Q1 tends to be their strongest because of the cold weather.
Yeah.
More people need propane when it's cold out.
Right. Everyone's glassing the heat.
Exactly.
So a weaker Q2 isn't necessarily a sign that the entire year is going to be bad.
Right. It's just kind of the natural rhythm of their business. And I think what's more important to look at is the fact that even with this Q2 loss, they're still projecting around 5% growth in adjusted EBITDA for all of 2024, at least compared to what they adjusted their 2023 figures to be.
Okay.
So that tells us that they're banking on a very strong second half of the year.
Okay, so they're expecting to make up for this dip in the next 2 quarters, basically. But it's not like they're just crossing their fingers and hoping for cold weather, are they? What about this whole renewed organic growth-focused strategy they keep mentioning? What does that actually look like in real life?
So it seems to be a few things. They're really trying to optimize their pricing, which we already saw happening a little bit in Q1 with the U.S. propane segment and those increased margins they got.
Right, right.
And they're also implementing cost-saving measures, just trying to be more efficient across the board. And then, of course, there's Certarus.
Right.
They're really leaning into Certarus and that whole CNG, RNG, hydrogen side of things. They see that as a big part of their future growth, especially when you look at sectors like oil and gas, things like that.
Okay, so it's like a three-pronged approach to this organic growth.
Yeah,
There's smart pricing, there's cost control, and then there's pushing those alternative fuels.
exactly.
But we talked earlier about how there's actually pricing pressures in those alternative fuel markets, so it seems like it's a potential growth area, but also one that's not without its risks.
Yeah, exactly. I mean, they've got competition, right?
Yeah.
There are other companies that also want to, cash in on everyone wanting cleaner energy these days. So it's a bit of a high stakes game for them, for sure. And that leads to kind of the million-dollar question here, which is, can they actually pull off this shift to organic growth at the same time as they're managing their debt
Right.
and dealing with all these other competitive pressures? It's a lot to juggle, especially with the whole energy landscape changing so rapidly these days. It's not like it used to be where you could just sell a lot of propane and you're good.
Nope.
They're trying to become this total energy solutions provider.
Yeah, exactly. You hit the nail on the head. And I think that's why some of those smaller details we find in the reports are actually really interesting because they give us clues about how Superior Plus is trying to approach this very complicated problem. For example, remember how they mentioned that they now have a higher proportion of propane customers in that U.S. propane segment?
Yeah, and that always kind of threw me off because I thought the whole point was that they were trying to diversify away from propane.
Right. Yeah. And long term, that probably is still the plan. But it seems like, at least for now, they're not completely ignoring that core business.
Okay.
They seem to be focusing on finding ways to get more profitable customers who use propane. The ones who are really reliant on propane as their main energy source.
And that way they can maximize how much money they're making from that part of the business while they're waiting for these other things like CNG and RNG and hydrogen to really take off.
So it's not about completely getting rid of propane. It's about doing it smarter.
Exactly.
And that kind of reminds me of how they're dealing with their debt reduction. Like, their goal is to get down to a 3.0x leverage ratio, but they're still at 3.8x.
Yeah, you're right. And in the Q2 release, they actually emphasize this idea of growth through self-funded reinvestment, which is a bit of a mouthful.
It is.
But essentially what they're saying is that they are moving away from acquisitions as their main way to grow, at least for the time being.
So less buying other companies, more focusing on what they've already got. Does that mean they're playing it safe?
I don't know if it's necessarily playing it safe, but it's definitely more careful. It's about focusing on things like internal investments and efficiency and making sure that they're spending their money in a smart way. Every dollar has to bring in a return, whether that's by reducing debt, funding these organic growth projects, or even being strategic about acquisitions.
Okay.
Not just buying anything that comes along.
So it's subtle, but it's a pretty big shift in how they're approaching things.
Right.
It's not that they're not ambitious. It's just that they're being more deliberate with how they get there.
Exactly.
But then that brings up the question of, okay, if that's how they're changing, what does it mean for their ability to compete in this new energy world?
Right. Because, they can make all these internal changes, but the world around them isn't exactly waiting for them to catch up. It's a fast-moving train, the energy world.
So we've talked about how Superior Plus is adapting their strategy, but the energy world is changing so quickly. What are some of the big picture trends that they're going to have to deal with?
The big one, right, is the energy transition itself. They are still, really reliant on propane.
Right.
And as we know, propane isn't exactly the poster child for clean energy these days.
Right, exactly. Even if they do this organic growth plan perfectly, What if everyone just stops needing so much propane?
Totally. That's the big question mark, right? And I mean, they're clearly trying to stay ahead of that by like really pushing CNG, RNG, hydrogen, all those good things.
Right.
But the problem is those markets just aren't that big yet.
Yeah.
There's no guarantee that they're going to take off fast enough to make up for it if people do start using less propane.
Right. It's like they're trying to jump from one moving train to another. They're both going different speeds.
It's tricky for sure, yeah.
Yeah.
But they kind of have to do it. And it's not even just about the fuels themselves. It's about the other companies they have to compete with. I mean, they're up against huge, well-established energy companies on the one hand, and then all these new startups on the other hand who all want to, get their piece of this whole renewable energy thing.
Right.
Remember those pricing pressures we talked about with Certers? That's probably just a small taste of what's coming.
Yeah, probably. So in that kind of environment, how do they make themselves stand out? Because it's not just about offering the fuel anymore, right?
Exactly. It's not enough to just be the propane people or even the RNG people or whatever.
Yeah.
They need to become something more like a partner to their customers, I think. If you're a business owner right now and you're trying to figure out this whole energy transition thing, you want more than just some company trying to sell you something.
Right.
You want someone who actually gets it, understands what you're dealing with and can actually help you find solutions, not just give you a sales pitch.
So those customer relationships are going to be key going forward.
Yeah, for sure.
But they've also got that debt hanging over their heads.
Yeah.
And it's like that classic problem, you need money to make money, but having too much debt can really hold you back.
It's a tough spot to be in because, every dollar that they're sending to the bank to pay off their loans is a dollar they can't put toward growing the business. So they have to walk this really fine line.
Okay, so we've talked about the challenges,
Yeah.
this whole energy transition, figuring out the competition, dealing with debt. But Superior Plus isn't exactly starting from nothing here. What are their strong points? What do they have going for them?
Well, honestly, their size is a huge advantage.
Okay.
I mean, they already have this enormous distribution network and a ton of customers.
Yeah.
So if they want to start offering new fuels or whatever, they don't have to start from scratch like some companies.
They've got a head start.
They already have those relationships and all the infrastructure they need. And I mean, they've been in the energy business for a long time, so they understand how it all works.
Right.
They get the logistics, they know the regulations, all that kind of behind the scenes stuff that would take a new company forever to figure out. And let's not forget that they've done a lot of acquisitions already. Even if they're shifting their strategy a little, that experience is really valuable.
Right.
They know how to find a good deal and how to make it work once they've bought a company.
It's like they have all the right tools.
They do.
Maybe they're not using all of them right now,
Mhm.
but they're there if they need them.
Exactly. And on top of that, it seems like they have a good team of leaders who know what they're doing. It seems very clear that they're serious about this whole energy transition thing.
Yeah.
And that's really important because it can't just be the CEO saying we're going green.
Yeah.
It has to be everyone on the same page from the top down. Otherwise, it's not going to work.
Okay, so we've gone over a lot here today. We talked about how Superior Plus is doing financially. We talked about how they're changing their strategy, about the challenges they're up against, and the things that make them strong. For someone who's listening to all this, what's the main takeaway? How should they be thinking about Superior Plus after listening to us?
If I had to boil it all down, I'd say that Superior Plus is at a real crossroads.
Okay.
They're making a big bet on the future of energy, and we'll have to wait and see how it turns out. They have a lot of things going for them, like we were just talking about. They've got the potential, they've got the experience, but the energy world is really unpredictable right now.
Yeah, definitely.
There are so many moving pieces, it's hard to say what's going to happen next.
So it's a story that's still being written, which I guess is part of what makes it so interesting.
For sure.
This has been a really fascinating deep dive, I think. We went way beyond just like the headlines.
Yeah.
And really got into what's going on with Superior Plus.
Right. And I think that's kind of the beauty of these deep dives. It's about more than just knowing the numbers. It's about understanding the bigger picture and all the different factors that are affecting a company.
Exactly. And for anyone listening, it's about giving you the information you need to reach your own conclusions.
Exactly. Because at the end of the day, the most important thing isn't to just give you answers, it's to help you ask the right questions.
So to everyone listening, keep asking those questions, keep digging deeper, and hopefully we'll see you next time for another deep dive.